Ready when you are.
Okay, so how many of you here would like to be rich and wealthy when you grow up? Fantastic, that's perfect. Because like many of you, I'm also eager to start making more money for my future. And I've been investing in stocks for about 3 years now. And I have found it to be an excellent way to grow your money and make an investment into your future. So that's why today I'm going to be talking about why you should start investing in stocks and why right now is the perfect time because you're younger. So to begin my presentation, I would like to start off with showing how, yes, there are other investment types that you can make, such as real estate or bonds. However, I think that stocks are better for many reasons. The first way we can compare these different investment types is by their ROI. And ROI stands for return on investment. So this pretty much just tells you what percent on your money you can expect to get in a given year. So according to Thomas Kenny, who is a writer for The Balance, he says that you can expect to get about 8% on your money from stocks, and for bonds, it's about 4.6%. Then for Matt Frankel, who is a certified financial planner, he says that after factoring in for inflation, you can expect to get about 1.5% when you invest into real estate. Now, I know that if most of you have any savings at all, it could be sitting in a savings account, and I'm here to tell you that that is not a good decision. Because according to the FDIC, the average savings account earns about 0.9% for your money, while according to inflationdata.com, average inflation in a year is about 3.2%. So as you can see, you're actually losing 2.3% on your money every year that your money sits in that account. And according to smartasset.com, the median US savings account has about $4,500 in it. And that is not enough if you have a major event happen or even an emergency in your life that requires more money. And that's why right now is the best time for you to start investing. I know that stocks are often seen as something complicated or something that only rich people do, but I think that couldn't be further from the truth, because the best time you can start investing is right now when you're young, because you have more time for the money to grow and you also get more experience while you're younger. Now, there's a couple different let's say you were going to start investing today, there's a couple different safe routes you can take. The first one is going to be index funds. And this pretty much, the index funds, they take stocks in the stock market and they compile it into one stock so that you can invest in, let's say, Apple, Google, and Microsoft, but then you can only do it maybe with $100 and it disperses the money equally among those stocks. But now the second safe route you can take is to just pick stocks that have large market cap values. So Apple is a perfect example because they have a market cap of $1.2 trillion, which is one of the highest in the world. So when you pick stocks that have high market caps, that means that they have big evaluations on them and they're going to be safer for you to invest in because they have more money and they have more growth ahead of them. So let's say you wanted to start picking stocks yourself though. There's a couple different ways you can judge how one stock is better than another. And the three I want to point out today are the PE ratio, right here, the market cap, and the stock chart. Okay, so the PE ratio stands for price to earnings ratio. And this pretty much tells you what kind of deal you're going to get on whatever stock. So, for example, right now, the stock market as a whole is trading at a PE ratio of about 21. So if we looked at Apple and we said PE of 22, that means that Apple is actually priced higher than most stocks in the stock market. So that means this one might not be the best deal, because you want, the lower the PE, the better. That means it's cheaper. Now, the second metric you can use to value a stock is going to be the market cap. And once again, this just tells you how much money they make, how big of a company they are, and how much growth they might have ahead of them. And then the third metric you would use would be the stock chart. And this kind of relates to with the 52-week range, because this tells you what the lowest it's traded at in the past year and what the highest it's been at. And then you can look at, let's say, a month, 6 months, a year, 5 years, just to see where it generally trades at. And so the reason you would want to do this would be because, okay, so Apple was trading at 267, and that's its 52-week high. So that means that this is the highest it's been in the past year. So this is not a good time to buy Apple, because you want to wait till it gets cheaper, closer to 142, and then that's when you would buy. Now, Next, I would like to talk to you about how you can start investing in stocks on your phone. Because there's many different ways for you to start. There's different platforms and stuff, okay? But I think the best and easiest way to start is by downloading an app called Robinhood. Because this Robinhood app has no minimum balance that you need to start, and there's also no fees that you need. So they don't take commissions, there's no extra charges or anything like that. So you could pretty much put in $5 in here and you could start buying stocks. Now, I would like to I want you to picture what investing is going to do for you in your future. So, investing is kind of like planting a flower in a way, because in the beginning is when it requires the most amount of work. And then once you do the initial work and the investment is set up, you kind of just sit back and watch, and it's going to grow. So, according to the United States Securities and Exchange Commission's website, I used the compound interest calculator and found out that if you were to make a $1,000 investment and put $200 a month in that investment for the next 10 years, you would have $36,000 at the end of those 10 years, while earning just an average rate of 8%, which isn't a lot. And that in total investment would require for you to put in about 25 grand, but you would have 36 grand at the end of that. Now, another way you can make money is with dividend stocks. So Coca-Cola is a perfect example, because if we look at the page for Coca-Cola, it tells us that the forward dividend is 3%, which means regardless of where the stock price goes for Coca-Cola, you're always going to make 3% of your money, because Coca-Cola is famous for being reliable with paying out dividends, and it doesn't matter where their stock price is trading. So finally, I want you to imagine that you are rich, and you don't have to worry about making every dollar from your job or being stressed out about paying bills, because the stock market helps you make passive income so that you're not making every dollar just by trading your time for money. So overall, the time now is to start investing. So you can download the Robinhood app and start investing on there, or you can ask me for the Robinhood link that I will send you, and then you get a free stock when you sign up. So that might be a better path to do it that way. So start making lots of money today and download the Robinhood app. Thank you very much.